Welcome to the AP Now podcast, the podcast that covers trends, insights, and emerging issues impacting every accounts payable function. Your host, Mary Schaeffer, is the founder of AP Now, a B2B digital information and learning company focused on all issues related to AP. Stay tuned as Mary and her guests discuss the business intelligence you need to ensure a cost-effective, technologically efficient, fraud-resistant, regulatory compliant accounts payable function. Without further ado, let's dive right in.
Welcome to episode 79 of the AP Now podcast. I'm Mary Schaeffer from AP Now, and today we're going to talk about some surprises related to invoice automation and what these surprises are and what this means for you and invoice automation in the future, what you can expect. So I've got some revelations. I'm going to go through that first. Then I'm going to tell you what this does not mean because there's some conclusion that you might come to. And then at the end, we'll tell you exactly what I believe it does mean for accounts payable, accounting departments in the future. So let's get started by talking about some revelations that have come to light in the last few months, few years. This is based on conversations that I've had with people, reading that I've done, also some results from several surveys and preliminary results from several others. So a lot of stuff put together that I've been thinking about for a while, and I want to tell you what conclusions I've come to. So revelation number one, and this one is probably the oldest revelation and something that we've been seeing for a while, is that those companies who have either invoice automation or AP automation programs, some of them are not getting the usage out of these programs that you would expect. So the program may have been in place for 6 months, a year, 2 years, and they haven't even gotten up to 50% usage. For a variety of reasons, and some of which we'll address a little later on. So usage isn't what we expected. Number two, some billers, some suppliers have actually had to add staff to handle the self-service features of their customers' invoice automation processes, solutions. And while the accounts payable team is really thrilled about that, the self-service features, the suppliers, not so much, especially when it means that they have to deal with 10, 20, 30 or more different solutions. And in a number of cases, they've had to actually hire additional staff. So, that's not a real win for them. Revelation number three. A few of the suppliers are so aggravated with some of the solutions and some of the additional work that they are actually refusing to use them, and they continue to send paper invoices or emailed invoices. And then this goes back to the first revelation, that people aren't getting the usage that they had expected. So the suppliers are out and out refusing to use it. Now, whether or not one of your suppliers will do this, a lot of that will depend upon who's the 800-pound gorilla in the relationship. Do they need you, or do you need them? And of course, how big a customer are you? The next revelation, and I've heard whisperings of this for several years now, but now it's starting to, kind of explode a little bit. And this goes back to suppliers not being happy. So the revelation is that a few of the solutions are not only invoice automation, but their accounts payable automation. So the whole process from procure to pay, including the pay piece, and they are pushing payments to card products. And the reason suppliers are so unhappy about this in certain cases is that when you push a payment to a card product, it means that the supplier does not get 100% of the payment. They get 99, 98, 97%, depending upon what arrangement they have. So they're really not happy about that. Likewise, last revelation, at least revelation that I'm going to share today, is that a few companies are really unhappy with the modules that they have purchased. They're either not living up to their expectations, they're harder to use, they're not user-friendly, maybe training wasn't adequate, a whole bunch of stuff. But whatever, they're unhappy with them. And in a few cases, we've actually heard people saying they hate the solution that they've purchased. So not a good situation. So what does this mean? So at first glance, the first thing I want to talk about is what it does not mean. Some people may be listening to this and saying, okay, well, there are all these things going wrong. This invoice automation stuff will probably go away. That is not the case. The writing is on the wall, especially with what some companies have gone through during COVID, trying to get invoices processed. Technology is here to stay. Invoice automation is here to stay. What we're seeing is companies are in greater number adopting it. It's the wave of the future. So to think that it will all go away, I believe, is not being realistic. So what does it mean? Number one, there will be more pressure on accounts payable staffs to use the solution that their companies bought. After all, they paid money for this, good money. And when you're remote working, which a lot of accounts payable groups are, invoice automation helps, okay? It gets rid of the paper and it eliminates a certain number of problems. So in those cases where the staff is just not using it because either they don't like it, they're worried about their job, maybe they didn't do the training, maybe the training wasn't adequate, whatever, all of that, be that as it may, is not going to impact. Companies who have purchased solutions are going to start putting pressure on their teams to use it, okay? That's number one. So the training must get better. Okay, I think that's kind of a no-brainer. A lot of the problems that people have is not because there's something wrong with the solution, but simply that they don't know how to use it correctly. So the training will have to get better. Maybe we'll have to have more of it. And the solutions will also get more user-friendly. But training is definitely a key to a lot of the unhappiness that's out there. Now, companies can mandate that their employees take the training, which is great on the accounts payable side. It's a little bit more difficult when it comes to your customers, your suppliers. You really, don't have control over their staff, and certainly would be in a difficult position in many cases if you tried to mandate the training. But the training will get better, and hopefully everybody will take advantage of it. Also, as new solutions are being developed, and this is more for the service providers who might be listening to this, the supplier's needs also have to be addressed. It's great that you have an invoice automation solution or an accounts payable automation solution that solves problems for your clients, the people who are purchasing it. But if their customers are not happy, if their suppliers are not happy, this will not be a good thing. So the solutions that are going to be successful are those that will address the supplier's needs as well as the customer needs. Now, we talked about companies being unhappy with what they purchased. We see some changes coming. Companies that bought solution A and maybe some promises were made about what the solution could do, or some assumptions were made that were not true, and where the companies are really unhappy. As these contracts expire, there is a decent chance that they'll look for a different solution. So even though it would be nice if that once you got a customer, they stayed with you forever, we're going to see some changing of solutions. I don't want to say bed skipping, but people will be changing who they're purchasing from, just like you might do with any other thing. And because of all this, without a doubt, the solutions will get better. The services will get better. The problems will be addressed, and we'll start to see better products out there. They're good, okay, but everybody can always get a little better. So end result, bottom line, invoice automation, probably here to stay, but it will improve, and we'll also have to learn how to use it better. So that's it for today. I'd like to thank you for listening. If you like this episode, please give us a thumbs up or a like or a share, or share this episode with your colleagues. If you want to be alerted to new episodes of this podcast, as well as new frauds, please sign up for our twice-a-week e-zine at www.ap-now.com. I hope to see you again on another AP Now podcast. Until then, be safe, everyone.